broke through the double bottom, and then today opened with a doji bar right near that low. This could be a breakout pullback short, and it has some sense to it because if the market goes below here, it would be a second time down, trying to make the market fall below the double bottom. It could work. The problem that the bears face is this is a pretty good move up. Here's one leg down. This might just be a second leg down on a higher time frame and result in a move up. So, yes, this is a breakout pullback short, but it might not go very far. Okay, here's a bull bar. What about buying this as a second failure? Here's the first failure below the double bottom, and then up. This would be a second failure. There's room to the moving average, maybe 5 ticks up there. I think it's okay to buy above this bar, but if you're short, I would hold short and reverse if it went up there. Right now you have 4 overlapping bars, which is not good. What about shorting again below this bull bar? I think that would be okay as well. The market made one bull bar and then a second bull bar to reverse back up, and the market already reversed up once from the double bottom. So that would be another failure. So I think it would be an okay scalp down. A new swing low, took out yesterday's low. You'd prefer a bull body, but sometimes all you get is close the upper half of the range. So this is a possible low of the day. This is a trend from the first bar bear. At this point, you got 5 bars down. This could be the first pullback and could lead to a short below the pullback. However, this is not typically how a trend from the first bar bear should look. You wouldn't want to see this kind of a reversal. So I think it's more likely that this is a low and a reversal than it is going to be followed by a breakout pullback short. The entry bar is not good, but the next bar had a strong bull trend bar with a 1-tick tail below and no tail on top. Pretty good range, 9-tick bar. Possible the market may double top here at the moving average and sell off, but with this kind of momentum, I think it's more likely that if the market does sell off, it'll form a higher low and lead to a breakout through the upside. The range is at this point about 5 points, so that's not ideal for a breakout into a huge trend day. However, it could result trending trading range day. This could pass for a lower trading range. The market could have a little breakout and then form an upper trading range to the measured move target. In any case, I think it's okay to be long anywhere here. I would not short below there. I would look to buy. 10-tick sell-off. It's a breakout test. I would not have shorted this. I would only look to buy. This is a tough call. Do you buy this or do you wait for a second entry? I don't know, a personal thing. I think the market is going up. I personally did not buy above that bar, but that was a mistake. Certainly in hindsight, I should have. In general, if I'm going to buy bull bars below the moving average, I prefer them further below because oftentimes there'll be sellers at the moving average. I prefer to buy bull bars with closes above the moving average, and the market did find sellers at the moving average. It's reasonable to obviously be long here. It's reasonable to go long above this bar because that would be a second entry long. But I understand how that would be hard. You have one push down, you have a second push down. The market is starting to get trending lows and highs. This is anytime you have a breakout, you always got to be thinking spike, and the most common thing after a spike is a channel, and the market is starting to form a channel. It might get a measured move from the high to low in this bar. It might be a measured move from the high of the day, high of the open to the low. That's not a good-looking short channel. Very tight trend line can be drawn along its lows. The odds are that even though it's 3 pushes up, 1, 2, 3, the first breakout of the channel will fail. So that's not a short. It might be a long above. It's always tricky buying above pullbacks and channels because sometimes they only go up 4 or 5 ticks and then you get another pullback. But I think that's an okay long. Now, this is a slight breakout of the trend channel line here, and it also broke above a trend line that I have since erased over here, and a bear inside bar. I'm not eager to short this, but if someone wanted to do it, I can understand. It's a test of yesterday's close. It's a second attempt to reverse high of the open. 3 little pushes up here. Maybe that's not a strong looking short. At this point, I'm seeing small bars, and that increases the chances that there's going to be a second leg down. I think it's okay to be shorting anywhere up in here. I tried to short, and I did not get filled. I mentioned that a lot of bars were having their opens, closes, or highs right at the same price. So that's an area of agreement. Both the bulls and bears are comfortable trading at that price. So if that is an area of agreement, that's probably the middle of something. And if it's the middle of something, and the market just came down, I'm assuming that there would be a measured move down. So I think, looking for a short is an okay thing to do. 2 legs down, a little spike, possibly a little channel. Outside up, it's a high 2, high 1, high 2. I was looking at stocks, and I didn't buy this, but I probably wouldn't have bought it anyway because of my problem with that price. This didn't come down for a measured move, though I think it will come down further. Market is getting small bars again and a bear bar. I think it's a bear bar at the moving average. I prefer close to be below the moving average, but I think that's an okay short. The market came down, then had a series of inside bars. Might be forming a double bottom bull flag low. You can also argue that it's a double bottom pullback. Here's a double bottom. Yesterday's low, today's low, double bottom pullback. I didn't like all these bear bars, and I would have preferred that this bar have a larger bull close. Sometimes some of the best trades have weak-looking setup. Okay, what about shorting this as a low 2? Again, it's a channel. It's the first pullback from the channel. I think the odds of a successful short there are not very good. Market had some more inside bars. Okay, the market has gone up about $10 and now has several small bars, and there's also a magnet right here. I'm not going to buy this. I think there's a decent chance it could become a final flag and lead to a reversal down. I don't know how far down it will go because this is a magnet. Plus, we've had several bullish things. The double bottom pullback, the double bottom bull flag, and the 60-minute chart is just walking up its moving average. Okay, possible final flag short. Do you short below it or do you short below the bear bar? I think you could short below that, but in general, I like to wait for a bear bar and short below the bear bar. Not a heck of a lot of room down to the trend line. This is pretty strong. I think I wouldn't buy this. I think there's a chance the market could sell off again. And I think it's okay to try to sell on a limit order somewhere up in here for a scalp. At this point, the market made a triple bottom, so I'm not going to try to sell because there's too much chance that the market could get a double bottom or a triple bottom pullback. And we've been having other bullish patterns, double bottom pullback here, double bottom bull flag. Now on the bottom, this becomes a double bottom pullback for this double bottom. This is a small double bottom pullback. I'm still wondering at this point if the market is going to have a second leg down. That's not a good setup for a second leg down. Small 2-tick doji bar, another doji bar. Okay. Now, I mentioned this could be either a failed low 2 and get at least a couple legs up, or it could have just a small push up and form a wedge bear flag. Traders could either buy it and look to reverse or wait, and then this breakout bar developed. I mentioned that behaving well, there weren't big pullbacks during the bar. Next bar was a good-looking bar. It was follow through instead of a reversal. So instead of like a bear inside bar or a bear reversal bar, the bar had a bull close, and then it got a little ahead of itself. It has a 4-tick tail. If you draw a trend channel line above these two bars, that's a little trend channel line overshoot. To me, this is too strong to be buying, to be shorting up here. Although you might consider shorting a second entry. Okay, this is an II. This is an okay second entry short. I think it's probably an okay short. And then now you have 2 legs down. It's an 8-tick pullback. It's a breakout of an II, but on a bull trend breakout, you always have to be ready to go long. So do you go long above here or above the II? I think either one is okay. Also, you have a bull bar. You can also go long above a strong bull bar. You have a small bar. It could be forming a lower high. So I probably would short below this bar. Another decent bull bar, and now the market is just levitating into the close, and it closed exactly on the measured move. Tomorrow, the market looks like it's accelerating to the upside. This could be a spike, and this could be a channel, so the market might come back here. On the other hand, today is a breakout day. It's possible that the market may gap up tomorrow and run.